Good morning, good morning. How's everybody doing today on this wonderful, beautiful Tuesday morning, August 12th, 2021? It's 10:30. We're going to do some deep analysis on the markets once again. We're going to look at some big movers. Big moves are taking place in the markets right now. So let's start by taking a look at that. We'll see what the banks are doing. They made some big moves last week, and we want to track what it is that they are doing and why they are doing it, and whether or not we're going to be having some trade signals that we will be able to take advantage in the next few weeks or so. All right, so welcome. If you can hit the like button, that'd be a great way to start this session. Okay, hit the like button. Let's get those likes up. Show your appreciation, and I would appreciate that. All right. Good. Very good. All right. So let's start by taking a look here at the charts and see what we've got. Good morning, everyone. So let's take a look at oil. Oil, we had a great trade here. Okay. Let's take a look at it. We were discussing this trade, and I alerted everybody to it last week. And what was taking place here is we had an institutional area of buying located right here. All right. And the idea was that the banks were pushing oil up. Okay. They dropped price down to an area of buying where we knew with a high degree of certainty that they were going to start accumulating their long positions again. Okay, we've seen evidence of this in the Cot report. We were looking at the data, and we can clearly see that the banks were accumulating a long position. And so they retraced price downwards to an area of demand. Okay, look at that right there. Okay, that's the institutions contacting their area of buying, and look what took place at that area of buying. Okay, buying took place, right? So when we got price up to here, they created another institutional area of buying right here, this green area. Okay, this rectangle here is an area of buying by the banks. So what took place was price went higher. Okay, from all the buying, they retraced it back into the area of buying, and then they filled in the rest of their orders, causing price to get up to here. And that was like a 5-to-1 or 6-to-1, I can't remember exactly. I think it was a 6-to-1 trade. So that worked out perfectly. Okay, now we're seeing price start to retrace again. So that was a perfect example of how we can use the Sherlock analysis process to discover what the banks are doing and be able to time the markets so perfectly that we're able to get into a trade and take advantage of that. Okay, time the entry perfectly, entering into a long position at the exact same time that the banks are entering a long position. So now what do we have now? Take a look at this area. This is an area of buying from the banks. Okay, so what has now taken place? You can clearly see they bought, they stalled price, and then look at this candle down here. What has this candle contacted? This candle has contacted buying from the banks again. Okay, and now we have the move to the upside. So let's take a look at what this looks like on a 15-minute chart. Okay, here we have a 15-minute chart. Price is entering into that area of buying. Now, if we look at this structure, we can see that this structure here was not good for drawing a trend line. Right? Our rules strictly prohibited that. Okay, so there hasn't been any signals to go long as of yet on this 15-minute chart. But we should watch this 15-minute chart because it could produce another signal to get into a long position. If it does not produce the signal, then price can easily start to retrace and push lower. All right, so stay focused on the 15-minute chart. What I'm looking for is, let's take a look here. Let's take a look at what we have on the charts. Let's see if we have any trend lines here that are good. Okay, not bad. There could be another one up here. Let me just check it. Yeah, it looks fairly decent. Okay, so now let's zoom out again. Okay, here's a 15-minute chart. So what I would say is that there's institutional selling over here in this area. Okay, that's institutional selling on the 15-minute chart. So lower time frame charts, that's where they have sell orders. Now, we have demand here, and we have sell orders up here. What we have to do is watch for price in between this area and see what happens. Okay, because if the institutions are going to use this area of buying that we've located on the 4-hour chart, if they're going to use it to propel price higher, what's going to happen is the algorithms are going to push price up to this area of supply, and it's either the algorithms are going to push price down from that supply or they're going to remove it. Now, if they remove it, what they will be doing is they will be creating institutional demand somewhere, okay? And that area of demand will likely be used to facilitate a push even higher on oil. All right, so I want you to pay attention to this 15-minute chart and just watch to see how it plays out. Okay, and let's see if the signal is produced or not. That will be very interesting to see. Let's see, Jason. Yes, sir, that's the trend line. Perfect. That is exactly the supply I'm watching. Good find, Jason. Good man. Your eyes are trained. Your eyes are trained. Okay. At the same time, let's be cautious, because what I will also bring your attention to is on the weekly chart, we have a trend line here like this. Okay, and so I want you to pay attention to the distance between this point and the trend line, and pay attention to this point and the trend line, and pay attention to this point and the trend line. Okay, so on this first contact, this is what made the trend line valid, and now it's moved up. So one of two things are going to take place at this point. Either the banks are going to retrace price back to this area, this trend line, keeping with the proportions that we've had already here and here. Okay, so this could be the third time where they keep with the proportion. Or what's going to happen is price is going to accelerate even higher from this area. All right, so this is the question. We don't have the answer for that, but this is something that we have to be aware of, because it's very likely that they can drop price down to the trend line. That is why in situations like this, it is so key to be watching those lower time frames, because we want to see what these lower time frames are going to lead us into. Are they going to lead price up higher, or are they going to start creating formations on the lower time frames that will facilitate a move lower? Okay, so on the weekly time frame, this is what we have. And if we examine the charts, okay, we also have to take a few other things into consideration. And I want you to take note of this area here where it contacted the trend line, where it began the trend line, and here where it contacted. And take a look at the distance between here and here. Now, to keep things proportional, we would expect a similar type of distance to be created. All right? Now, if that was the case, then we can make the assumption that price will go even higher. Now, you can see that there is an area of supply here by the banks. This is an area of selling by the banks. So if price was to continue higher and hit this area and then drop, you can see that that would keep with the proportion of this trend. So that's also something that leads us to suspect that they could continue pushing price higher from these areas. Hence why I'm saying we should be taking a look at the lower time frame charts to see if they are going to build formations that will support a move to the downside, or if they're going to build formations that will support a move to the upside. So that is the question, and that is what we need to be focused on. All right. So when it comes to doing and applying the Sherlock analysis process, which is what we're doing right now, it's about examining all the evidence of what is being displayed on the chart and taking what we know to be true about what we are seeing and keeping our eyes on the charts and knowing what time frame charts to be paying attention to and watching for their formations to see whether or not they are providing evidence that price will continue its rally or if they're going to start retracing price. Okay, so that's one that I'm going to be focusing on. I'm going to be looking at oil and examining these lower time frame charts. And as things play out, I will be posting it in the observation journal on the school site. So if you're a member, just pay attention to the school observation journal, and I'll be posting updates on what is taking place. Now let's go over to Bitcoin. Bitcoin's a fun one, okay? Because as I've mentioned several times, when price was up here, okay, we said that we wouldn't be interested in buying unless it came down to this area. All right. Now, a lot of people got in there and they lost a lot of money because once price started to decline from this area here, everybody was scrambling to get out. Well, that's exactly what was intended, was for this big scary move to the downside, getting people to exit out of their positions so that the big institutions could come in. Now, I mentioned Carl Icahn got in down here, and I'm sure many other people got in down here. Okay. They rallied price up. Some people took profits there, which fueled the move to the downside, which is exactly where we had our target. And now we're seeing a push back upwards. All right. So we have a supply structure up here. Okay. This is a supply structure. This is something that we talk about in our classroom sessions. So there's not a lot of pressure to the downside that we are expecting from here, although there could be. It all depends on what the banks want to do. But what we have to look at is the lower time frame charts to see what kind of structures they are building. Okay, so I can tell you right now by looking at the daily chart, they're building a really nice uptrend here. Okay, and again, as you can see, we have a trend line that goes from here all the way up here. Now, if we examine what is taking place, we can see the high that price made away from the trend line. And now let's take a look at what is happening here. Okay, it's a very similar high, I would say. If we look at the distance from the beginning of the trend line to here, and we look at the distance from the beginning or from that second point to, let's say, here, that's about equal somewhat. Now, if they're going to keep with the proportion of this trend, then we would suspect that eventually in time price would decline down to this trend line here. And this would be a decent area to be basing trades off of from what I am seeing. Okay, this would be a decent area that I would consider opening up trades. But we have to wait and see if price does decline. If price doesn't decline and it heads even higher, we've got supply that we're in right now, which is why we're seeing price stall. And we're also noticing that we have institutional selling up here between the 62,000 and 64,000 area. Okay, so price can continue higher, and if it does so, they will be creating new buying. Okay, they'll be flushing the market or pushing in new purchases of Bitcoin, and that is highly possible. If they do that, you know, I'd suspect that somewhere in this area we'll have some institutional demand, and we could see something like this form in the near future. Okay, so be aware of that, because when it comes to doing analysis on the charts, what we're always doing is we're applying a specific process to discover what the institutions are doing with price and taking note of what we are observing and laying out what the options are in order to participate with the buying or selling that the institutions are doing at this moment. So I'll be keeping track of this and watching, and I want you to do so as well. I want you to see how price reacts from this area of selling. Does it propel price down? And if so, why? And if it gets down there, we'll be looking at the lower time frame charts to ensure that there's going to be buying from these lower areas. And if price continues upwards, they will be creating new demand. And then we want to observe what happens when price enters this area at the top here, okay? Because when you look at the charts, that is the very top of price. That is the last area that would hold price down if indeed they wanted to hold price down. If they remove this area here, they will be forming new demand. They will be pushing in new buying into the market, and we can see this continue much higher. Okay, but the structure so far that's being built here from that massive area of demand that we located, remember the institutions were buying down here. Major investors were buying down here. This push to the upside is created by big players, okay? Big players. And what they have managed to form here is an uptrend off an area of buying. This is extremely powerful, okay? This is extremely powerful. They're creating an uptrend off of an area of buying. So we need to respect that, and we need to watch for the signs of this momentum continuing. Okay? If you have any questions, let me know, and we will try to get to them as best as we can. Okay, so that's two charts you should be watching. Okay, oil and Bitcoin. Those are two charts that everybody should be watching. Now we got the dollar. Okay, what is taking place with the dollar? So we've described what we're seeing here. We've laid out all the evidence of what is taking place on the charts. And right now we have this situation on the dollar, where we have this institutional area of supply that has not been contacted yet, and it is just located above price. So we have a very solid upward trend here on the daily chart. Okay, same thing with the Bitcoin, but we do have some supply that we are facing. Okay, and again, I will point out, if you look at the distance between the higher price and the trend line, and you look at the distance between the higher price and the trend line, you can see that at any point this can come, hit supply, and drop back down to the trend line. Okay, and if that takes place, they will be keeping this in proper proportion with the trend, which would increase the odds of the institutions continuing to buy when price completes its retracement. Okay, now pay attention to that, because I think it's very important. And I will also remind you that when you take a look at what the retail traders are doing, okay, this is what they're doing with the euro right now. Okay, they're mostly long, which means they're mostly short the dollar. Okay, so this is what is taking place. They are mostly short the dollar, and we're seeing very strong structures being built to the upside. And so far, this structure is very proportional. When a structure is very proportional, it means that it's very strong. All right? So far, everything is looking good for a continued move to the upside, which will be against what the average trader is doing with their positions. So keep an eye on that one. All right? Another thing I will point out to you. Okay? Take a look at the US dollar Japanese yen. Okay? The US dollar Japanese yen is one that we've been watching for, and we've been seeing this type of price action for quite some time. A little bit of a move down, a little bit of a move up, and then a little bit of a move down, and so on and so forth. It hasn't provided anything solid for us for quite some time. But what I will tell you is that we had an institutional area here of selling. What does that mean? That means the algorithms were programmed to sell at this location. Okay? And that is why we got many months of price stalling there. Because what we have is price pushing up and reaching an area that the institutions had their algorithms programmed to sell. So some buying was taking place, and then some kind of offloading of positions and loading up on a position. And if you remember, we went through this in the latest weekly Forex forecast. Let me just bring it up and I will show you. We definitely see signs of, actually, let me bring up my spreadsheet. It would be better because I have the full thing there for you to look at. Okay, this is something that's important, and I want to point this out to you. So I'll open this up and I'll go over to the US dollar Japanese yen. And let me point something out to you here, okay? We keep track of when the institutions are closing contracts and opening up contracts, because what we have learned by studying the institutions and what they do with their contracts is every time contracts come up for expiration, they're either going to do one of two things. They're going to use it to shift their positions dramatically, or they're not. Plain and simple. Okay? And so when we take a look at the contract expirations that happened around the date of September 14th,